Hi guys, have you ever wondered how to purchase stocks, bonds, and mutual funds? These investment options often float around in conversations, but the process of actually acquiring them seems daunting to many, and I'm often asked how to do this. I've put this video together in order to demystify these financial instruments and break down the process into easy-to-understand steps. Okay, so first let's consider stocks, bonds, and mutual funds in a simpler perspective. Picture stocks as a piece of a company, not the physical part of it, but the conceptual entity. When you buy a stock, you're essentially buying a small piece of ownership in a company, and you have a claim on a part of the company's assets and earnings. In other words, you become a shareholder. As companies grow and make profits, so do you, with your shares appreciating in value. Now let's consider bonds. You can think of bonds as a loan that you, as an investor, give to a corporation or even a government. By purchasing a bond, you are essentially lending money to these entities. In return, you receive regular interest payments for a specified period of time. At the end of this time period, which we call the bond's maturity, you get back the initial amount you loaned. So with bonds, you earn interest on the loan and then get back the original principal at the time the bond matures. Lastly, let's delve into mutual funds. You can see them as a collective pool of investments. Here's how they work. A mutual fund gathers money from a multitude of investors to buy a diversified portfolio of stocks, bonds, or other securities. This way, even with a small amount, investors get to participate in a broad array of investments, which individually might have been beyond their reach. So you have now got an idea of what these investment vehicles are. I'll go into the relative merits of each investment type in the next video. For now, let's focus on how we can get our hands on these investments. Step 1, you need to find a broker. This is a crucial step. Brokers act as the middlemen in the financial world. They help you buy and sell securities on various exchanges. Brokers range from full-service brokers who provide personalized advice to discount brokers who offer a do-it-yourself approach with lower fees. Before we move on to opening an investment account, let's delve a bit deeper into the world of brokers, specifically online brokerages. These are digital platforms that allow you to buy and sell securities such as stocks, bonds, and mutual funds. The advantage of online brokerages is that they are often cheaper and more convenient than traditional brokers. You can find them by doing a simple internet search. Examples of online brokerages as of 2024 are Fidelity, Charles Schwab, Robinhood, Interactive Brokers, and eToro. They have made investing more accessible to the average person. The key is to do your research and compare the costs and offerings of each and find a broker that works best for you. So now that you know what online brokerages are and how they work, you're ready to take the next step, opening an investment account. Step 2, open an investment account. This is where you'll store and manage your stocks, bonds, and mutual funds. To do this, you'll need to provide some basic information about yourself, such as your name, address, and social security number or other tax identification, depending on where in the world you live. To do this online will take about 15 minutes. Step 3, deposit funds into your investment account. You'll need money to buy your chosen investments. The amount you deposit can start from a few $100s depending on the broker's requirements and your personal financial goals. Typically, you will link a bank account to your brokerage account. This will allow you to fund your account but also move profits out into your bank. Step 4, research. This is incredibly important. Before diving into buying, do the research about the stocks, bonds, or mutual funds you're interested in. Spend the time to look at their past performance, future projections, and the overall health of the company or sector they belong to. Many brokerages will provide a platform to do this research. There's a lot of information available online. Just be sure you are basing your research on facts, not conjecture. I cannot stress this enough. There is also information to be found on international cable shows such as Bloomberg and CNBC. Step 5, place an order. Once you've done your research and decided what to buy, it's time to place an order. You can specify the number of shares or the amount of money you want to invest. Step 6, monitor your investments. After purchasing, it's essential to keep an eye on your investments. This doesn't mean checking every day, but periodic reviews can help you stay on top of any significant changes. In summary, purchasing stocks, bonds, and mutual funds involves finding a broker, opening an investment account, depositing funds, conducting research, placing an order, and monitoring your investments. It might seem complicated at first, but with a little practice, it becomes a straightforward process. Remember, investing is not about getting rich quick, it's about steadily building wealth over time. So start small, learn as you go, and gradually increase your investments as you become more comfortable and experienced. The world of investing is waiting for you, and now you have the tools to dive in. This channel is not an investment advisor and does not provide advice, brokerage services, or recommendations to buy or sell particular stocks or securities. Our goal is to provide information on how to improve your personal finances. If you've found this video useful and would like to see more information like this, please remember to like and also please subscribe to this channel.